Hello. Most taxpayers breathe a sigh of relief when they hear these words. You qualify for an IRS installment agreement. But the truth is that payment plans are not the safe harbor that a lot of taxpayers think they are. In fact, if done incorrectly, they could cost your clients thousands of dollars and sometimes leave them in a worse position than when they first came to see you. So today, I'm going to walk you through the pitfalls that taxpayers and tax professionals like you must avoid when setting up IRS payment plans. Welcome to another episode of Let's Talk Taxes Tuesday with myself. I am Nafisa Manira, your tax attorney CEO who rescues businesses and individuals with tax debt and trains the next generation of attorneys, CPAs, and EAs to do the same. Welcome back. I'm so glad that you have decided to join us for this episode. And we're going to jump right into these pitfalls, right? Let's start off with just a basic refresher to make sure that everybody's on the same page. Now, when we talk about IRS payment plans, what are we really talking about? Well, at the end of the day, all we're talking about are payment plans that allow the taxpayers to pay their tax debt over time. That's all we're really talking about. Now, the IRS has short-term installment agreements, longer-term installment agreements, guaranteed, streamlined, partial pay. They have different types of 80 to 90%. Sounds simple, right? But here's where the problem begins. Let's look at the pitfalls that you, as a tax professional specializing in this area, must avoid. Okay, pitfall number one, thinking that interest and penalty stops. A lot of clients might come into my office and the first thing they're going to say, a lot of them might say the offer and compromise, but a lot of them who know they have a little money will say, oh, I just want a payment plan. Can you help me set up a payment plan? Right? And they think just by setting up a payment plan that stops the interest and penalties which are continuing to accrue on that debt. But that's incorrect. They are mistaken, right? Penalties and interest continue to accrue on that debt until it is paid off, whether they are in a payment plan or not. So we want to make sure that when we are advising our clients and we are taking a look at their situation, that we make sure that we educate them on this fact that merely filing your installment agreement application does not stop interest and penalties for continuing to accrue. Now let me give you an example how this might show up and why this is a pitfall. Let's say we have a client named Teresa. She's a self-employed consultant. She owes the IRS, let's just say $60,000, all right? So she set up what's called a streamlined installment agreement. It's payable over 72 months. In other words, it's payable over 6 years, okay? Thinking, hey, I'm going to set up this installment agreement with the IRS. I'm going to pay over the next 6 years. No problem. But interest and penalties is continuing to accrue on that $60,000. So much so, she ended up paying more than $15,000 extra before the IRS came knocking again because she eventually defaulted on that installment agreement. So the lesson here that we want to make sure that we're aware of as tax professionals specializing in this area, as well as we educate our clients on this, the lesson here is that payment plans buy clients time, not savings. Okay, let's move on to pitfall number 2. Pitfall number 2, choosing the wrong type of plan. Now, as I specified before, there are different types of installment agreements, right? And there's a big difference between a guaranteed installment agreement and a partial pay installment agreement, streamline, a regular installment agreement, right? So if we're not careful and we don't know the different distinctions and the requirements for this, as well as our client's individual situation, we might not only subject our client to higher, for them paying more than what's necessary, but we also may subject them to unnecessary financial scrutiny, right? With financial disclosures that may be required depending on what type of installment agreement that you choose for the client, okay? And keep this in mind, the Taxpayer Advocate Service has found that nearly 40%, that partial pay installment agreements have a default rate of 23% higher than regular installment agreements, right? And so we want to make sure that we're not putting our clients or setting our clients up for failure before they even really get started by putting them in the wrong installment agreement. Pitfall number 3, defaulting on an agreement. Now, defaulting on an installment agreement is more common than a lot of people realize, right? It's more common than a lot of people realize. And the Taxpayer Advocate Service has found that nearly 40% of taxpayers who enter into an installment agreement had incomes below the allowable living expenses. So what does this mean? Basically, taxpayers have been set up into installment agreements that they can't even afford. They can't even afford them, right? But they were set up, put into this. So again, these are taxpayers who've been set up into installment agreements that they cannot afford, basically setting them up to fail before they really even get started. Okay, so we may have to be very strategic of examining our clients' finances as well as the best types to put them in so that they can maintain these payments and are able to make these payments. We have to be very strategic about how we set it up, what payments that we want to choose for our clients so that they do not default, right? Because our goal is to help them be able to pay off these payments. Pitfall number 4, ignoring other relief options. Now, I don't know about you, but I've had clients come into my office and they've already trying to tell me how to resolve it. Can you set me up on a payment plan? And they are so focused on that one thing because they read a little bit about this, read a little bit about that, and they also are driven by fear. They just feel like if I can just get this done real quick, if I can get myself set up on an installment agreement quick, then I won't have the IRS keep coming. I won't have to fear that the IRS is going to take my bank account or garnish my wages or do anything like that. So they just installment agreements. No, our job is to advise them and strategically place them in the best tax resolution for that particular client. Okay, so although an installment agreement may feel safe, it's not always strategically the best move. And as tax pros, we need to make sure that we evaluate every option to give our our client in the best position to be successful in that resolution that we choose for them. Okay? All right, so pitfall number 5, extending the IRS collection power. Now, I know many of us already know when you're dealing with the OIC that extends the statute of limitations, right? Because once you submit your OIC application, that stops the clock running in terms of statute of limitations, but also same thing when you consider installment agreements, okay? From a technical standpoint, once that installment agreement application is submitted, the clock stops running on the statute of limitations until a decision is made on that installment agreement. Either it's accepted and then the clock will start again, or it's rejected and the clock will start again. So we have to make sure that we are keeping our eye on what is the statute of limitations for this particular debt that we're trying to get a resolution for, right? Because we don't want to unknowingly extend our client's time because we rush to put them in an installment agreement that may extend their time 30 days, 60 days, or whatever, depending on a particular circumstance. All right. Now, pitfall number 6 is overpaying without a strategy. Again, if we want to look at our previous example that I gave you about Teresa, right? And so let's just look at the math. She was doing paying $700 a month. Okay, let's just keep it simple and say that she was paying hers over 10 years. She owed us $60,000. Well, over 10 years, she's going to end up paying $84,000 on a debt that was $60,000, right? And maybe this is a situation where she could have qualified for OIC. But because we were in such a rush and we didn't fully examine her financial situation, she ended up in this installment agreement. Well, she could have got maybe an OIC and paid a lot less than $84,000. Okay. So as a tax professional, we just want to make sure, again, that we are looking at the client's situation and we are examining all the tax resolution options and choosing the best one for that particular client. So in wrapping up, we want to make sure to say, hey, what are our takeaways today? Our takeaways are number 1, interest and penalties, they don't stop. They keep accruing until that debt is paid. Number 2, the wrong type of installment agreement could end in higher failure rates for our clients, and we make sure we don't do that. Defaults are more common when your payments exceed the client's real budget, okay? Also, too, that better tax debt relief options may exist. We want to make sure that we examine that. Payment plans can extend the IRS collection window because it stops when that application is submitted. So we want to make sure that we got our eye on that in the statute of limitations. And also, without a strategy, clients can end up paying tens of thousands more dollars. So in short, we want to make sure that we're using payment plans as a tool. If not, without guidance, they'll end up as a trap. So I hope this was helpful for you. Thank you so much for joining me today for this other episode of Let's Talk Taxes Tuesday. And if you enjoyed this and you want to go deeper and you want to learn more information and more about how you can become an expert and specialist in this area, join me this October for Tax Magic Live. We're going to do a deep dive over 3 days. We're going to take you from being a generalist to a specialist, from zero to a hero in the IRS tax representation game. Join us this October. So look in the comments for a link to our landing page for Tax Magic Live. And thank you so much. I'm Nafisa Manira. Till next time. Bye.